Okay, a lot to cover in a very short period of time. I want to welcome everybody to the Making Money Trading Stocks and ETFs for the first day in December 2017, December 1st. We have exactly, I counted them this morning, we have 20 trading days left until the end of the year. That takes into account the Christmas holiday and that type of thing, so only 20 days left. Now is a time not to go on any big risk binges or anything like that, or to ease up on following your rules and this type of thing. It's time to basically just make sure you're following your rules, because we don't want what has turned out to be a very good year to be, upset because of a couple of just misjudged and misplayed hands. I want to remind you that all the materials that we present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Here's a little bit about who I am. Most of you, we've either met face-to-face or you've been a member for quite some time of either of the active trend trading service and or just the system. For our free services also. So I want to thank you for being part of the family. And so remember, I love this statement by Tom Sosnoff. Those of you know Tom Sosnoff, he was very instrumental in developing Standing Up Think or Swim before he turned around and sold it to TD Ameritrade. But wealth creation is a derivative of mechanically addressing opportunity. In other words, this is what a system trader basically says, that wealth creation is a derivative of mechanically addressing opportunity. Why mechanically? Because it reduces the impact of the emotions. And as long as we're talking just briefly about that, I want to just throw up real quick. I don't want to throw up, but I want to basically put up there. Mike Traeger and I have put together a new video for the early warning alert system. If you just go to the website for both, it's accessible by everybody, but just click on this middle section right here. This is the front page of the website. Click on this and it'll take you to the new 2017, 2018 early warning alert video that we've put together. We've had a huge discount in the membership amount for the year, simply because we've refined what we're doing. So if you want to take a look at this, if it's of interest to you, please check it out. You can take advantage of this really deeply discounted membership. Okay, moving right along, let's do a market review, stocks and ETF performance, and bonus trades if we have any. Here's where we're sitting as of about 9 o'clock this morning on December 1st. Market was kind of interesting this morning. It basically shot up like a skyrocket and then fizzled and just went boom. And so is this the exhaustion move that we've been waiting for? Or will the market just do what it's done over the recent past, where you get just a slight few days worth of correction and then a quick rebound? We shall see. Let's take a look at what the market is telling us right now. So let's go over here to the S&P. This is very interesting. S&P, the purple line up here is the 8-day moving average. The one right down below it, kind of a reddish or maroon color, is the 20-day moving average. As you can see, since we began this latest move back in August of this year, we bounced off the 100-day moving average and then went on to just a really nice rally that is continuing to move forward. We get what appears to be a little bit of not quite negative divergence, but we get a breakout, and so we'll see how this works out on the S&P. But it looks like the TSI wants to roll over. It looks like the momentum wants to roll over. I mean, it's in an area of resistance, where while it is making new highs, it's a place where it makes sense for it to turn around and want to roll over. one of the things that IBD talks about, and I like to trade IBD stocks. I don't trade their methods per se, but if we duplicate this, and they do it on stocks themselves and not the indexes. But let's just lay that in there. My bandwidth is crapping out on me. They'll lay in a channel line like such as that, and when the channel line is busted, the way this has happened, just happened yesterday on the S&P, oftentimes they'll look at that being a exhaustion type move that will lead to a potential pullback. We got a really heavy pullback today. What was the reason? Part of the reasons were, you know, there's questions on whether the tax bill is going to continue to move forward, or is it going to get stopped and shot down, just a lot like a lot of the other things that President Pence. You know something I don't, David? Eric, I haven't been watching the news today. Anyway, it has shot up and then pulled back, and then so TSI rolling over. Is this going to be a potential move down? One could categorize this as a series of, okay, clear where the sellers came in up here at the 2656 level. A huge, you know, a very large kind of a hanging man type candle. And so that's where this may be indicative of this is a topping motion in the S&P. What are we seeing over here on the weekly chart? Well, if we push on back down below this line and the S&P for the week finishes below 2618, 2620 or something like that, we would have a shooting star on a weekly chart, you know, weekly chart in place. We'll see if that in fact does happen. NASDAQ, there we go. NASDAQ, okay, I'm going to get rid of some of these. I'm going to get, again, NASDAQ popped. If you're applying the same kind of rule, we basically had going into earlier this week, we had what's called a rising wedge, which is oftentimes considered a bearish kind of signal. And sure enough, we wedged up, it pulled up above the top of the line, and then in fact has been selling off over the, you know, much of this week. If this week's price action finishes where it's at, we will have a bearish engulfing of last week's pattern. If it closes on down a little bit further, it could in fact engulf a couple of previous weeks, which can be considered a significant bearish indication, bearish signal. As we see, pushing on down, we are at, here's a level of support right in here at about the 62.48 level, and also you've got these uptrending. Here's a trend line here that forms support, and then this uptrend upper channel line also provides a level of support, which it found and bounced off of today. Longer term, weekly, TSI turned over and is crossed. Normally, what has that led to in the recent past is when you get that cross in the upper reversal zone of the TSI, you get the cross, you will get a pullback for a few weeks and or days, and so we'll see what transpires with that. Similar thing here, we had the TSI. Watch to find out, because oftentimes, as we've spoken many times in the past, there we go, is as TSI approaches the zero line, that zero line is often a very strong level of support, as we saw here, and all it did was it approached it, hit it, rebounded, and away we go. That's the way things have been going over over a lot of this year, where you get these shallow pullbacks and then a rebound. We'll see if that transpires again, and we have to play it that way until they stop doing that. Russell, okay, Russell pulled all the way back to 1500 and retested its past breakout and is now, running up the hill. Shooting star yesterday, being fulfilled today, And so this, this does provide us a new high. Clearly, we had some negative divergence on a daily basis, and certainly we have negative divergence on a weekly basis. I really don't like it when price action does this, where it pulls just intraday pulls back dramatically into a support area moving average. Especially when one is so far away. One can have an order placed, if it comes down and bounces off those areas, but it's a challenge to do that. But these are the things that we're going to refine in on going through into the end of the year so that we don't miss these type of moves. Let's take a look at a couple of stocks we were taking a look at last week. EIS, I think that's ours at 8. Okay, got whacked this week. We basically had purchased a little bit of it here, made a real quick run up, and then fell out of the sky. We got stopped out for our just as a drop below this swing low. So it was about a 4.5%, 5% trailing loss. Got kicked out. Now it's seeking new support down here at where it found support before in the 70 areas. Still worth keeping an eye on for a potential rebound depending on what happens with the other tech stocks. We've got TSI in the low. We've got on a daily basis, market forecast below the 20. What does that typically mean? It means that what that typically means is that we will get a potential bounce up within 1 to 5 trading periods after this. But clearly it is in a downtrend. And where we go? What were some of the other ones we were looking at? We were looking at Nugget. Nugget has gone up and down. And it still continues to do so. It looks like it has found some support down here at about the $28 level, and we're getting a little bit of positive divergence here. Would like to see Nugget or gold, if gold rallies into the end of the year, Nugget should take off and break up above this 31 level. You can either check the GDX, which I think is one of the gold miner ETFs, or GDM, which is the other one that emulates this, and you can see it has found support down here about the 22 level. It has another level of support down here at the 21 level, but we would like to see this hold and then press up from there. We can now take this, depending on how we close out today, and we can actually move this, activate that, move that trend line over to this high, which will approximately be here. And I can adjust that on a daily chart or just adjust over here on a weekly chart to get it identified up. So that becomes kind of like my new trend line that I'll be watching moving forward. Let's move that down a little bit, see if we can get it. There we go. So that's what we're looking at with that. What else? Keep an eye on Netflix. This may be our next bonus buy. Netflix. It's finding support down here at the 85 level, which is just above the 100-day moving average. Netflix. I was reading a little bit about Netflix. If they since they fired Kevin Spacey because of his apparently sexual abuse of something or some person, whatever. They got rid of him, and they're looking to see if they can rebound from that. So, I really doubt that this is that is causing this kind of reaction. I think it's just basically people doing profit taking. They've taken profit down to a level of support. Let's see if that support holds and bounces. LABU real quick, just for you, David. LABU. Yeah, we get a nice break up above that level there. What was LAB? Let's take a look at, and thanks to Eric. Yeah, we're getting a similar type situation here. Let's take a real quick look at this. Okay, TSI is rebounding off the zero line. Positive candlestick today, moving back above the trend line and the moving averages. And so if the 8 crosses the 20, which it looks like it may do if this process continued, I would look at a potential buy on, and I'll probably set this up for next week, a buy on let me go to back to LABU. I would look for a potential buy here off the 820 combo, just because that's where it makes sense to buy. So, okay, that's kind of covers that. Let's go back to. I'm going to go back to. If you guys ever come over to Hawaii, you got to come see me. But this is a beach out at it's on Ko'olina. This is looking up the Waianae coast. Great place for a walk to it, but it's about a 3-mile walk. And my wife and I like to get out there and do a walk. And it's just we're out there on Wednesday morning. It was absolutely gorgeous. And it's nippy here. It's cold. It's wintertime here in Hawaii. It's about 70 degrees, but with the wind chill, it gets down to about 62. I know I don't get any type of anybody saying anything good about that. They just go, suck it up. So seasonality on the NASDAQ and the S&P, what I want to take a look at is basically we're here now. We're right here at the beginning. And what often happens with the NASDAQ, you'll get a little bit of a suck down into the first couple of weeks in the month, and then you get your rebound going into the end of the year. A little bit less than what we have over here, but that's always what we'll be looking for. Similar thing on the Russell, and then I think, so, okay, here's where we're sitting with the across all 3 strategies, doing fine. Looking to add to strategy 1 going through the end of the year. Strategy 3 is just about done for the year. It's got a total of about 133% for the year, but I'm really close to closing out my S&P trade and or the SPY trade. It's up 90% for the year, and closing out the second Tesla trade, and then just basically wait until it moves into the beginning of 2018. Remember that active trend trading system, we're about clarifying and simplifying so that we can all multiply. We follow the 5 pillars of active trend trading: what to trade, top quality IBD growth stocks and top-notch ETFs, when to enter, when to exit, what strategy we're going to use, and then what we expect to happen. Here's what we were looking at going into this week. Are we ready for an end-of-year surge? Or is it going to be into the end of the year kind of simply because this has been a really out of the ordinary post election year where the market has just continued to push higher, 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 higher. Eric mentioned that apparently General Flynn is going to testify against President Trump. We'll see if that has any sticking thing or not to impact the market. And I can tell you, if the tax plan does not get passed, I think that would have a detrimental effect on the market and might send it into more of a correction than we've seen in quite a while. But here are the other things I'm looking at: NASDAQ, or Netflix, Tesla, NVDA, kind of at the primary stocks in the holdings. Nugget in and out. The 7 ETFs that we do trade, the catfish special we did here recently. Want a reminder, continuously working on refinements and putting those in place for all 3 strategies going into 2018. Starting probably this weekend, I will be coming out with the composite watch list for active trend trader members. If you are not a active trend trader member, either free and or a one who's just watching the free newsletter or a premium member, you want to join up, because this composite watch list is going to be very, very powerful, and it's going to be it's basically going to capture every stock that is on any IBD watch list the previous week. Then I will be doing an analysis of it to pull out the best of the best from that, and that will be what goes into this composite watch list. early warning alert updates and new memberships. We are ready now, and basically that has all been, uploaded. You can watch the video. Please go watch the video. Just Mike does a really great job on the video, and some of the adjustments he's making is I think going to make the service even that much better going into 2018. Lastly, if you are premium members, we had no triggers last week, although we did. Play has done really well. AEIS did just the opposite. I'm still looking at WNC, and I'm going to cover that. I'm going to cover Play real quick. But this is all in line now with the proper non-leveraged ETFs up here. Then we'll cover on these top 7 are 3 primary stocks that we're looking at, and then kind of our floaters down here. I do want to come back to WNC real quick. The bonus trades for anybody who joins either the Monday or the Friday webinar, I'm doing 10 to 12 trades per year that I'm sharing with everybody. Here's the 2 that we've done so far. We started this in October. We've done 2 trades so far. These are closed. Please notice on this, and because I got an email from somebody, this date here is either the date we exited or the current date. And so on these trades down here marked in green, we exited those on those dates. However, we're still holding on to this one single position in Play, and just prior to going on session today, it's up to 53.60 or a 12.23% in about 49 days. So really pleased with how that's working out for everybody. If you're not an active trend trading member, again, I'm talking about any level of membership, please use this link at the bottom of this page to get signed up so that at least you'll be notified of these bonus trades. Okay, well, there we go. Let me go back to this real quick. And I will just throw this out. End of year specials for memberships. 1, 40% off the regular monthly membership for the active trend trading. This includes all the text messages, the emails, alerts for all 3 strategies, or you can join as the early warning alert, which is Mike's service that he provides. Again, this has been greatly reduced, and then we reduced it again for the people who are loyal to the webinars. $249 per year, regular $500, and you can get either one of those by just going to this link right here. And once you do register at either of these levels, that price never goes up. It always stays the same as long as your membership. So, when we first got started several years ago, I think our membership here was about $30. It is now up to $74.99, which is I think is a good deal. And we're offering, of course, to specials for $44.99. But it'll never go up. And in the case of the early warning alerts, it actually was a price rollback. So with that, 2017, a year of explosive growth. We'll see what 2018 is looking at. And I do want to take a look at a couple of stocks before we jump over. What time is it? Yeah, I'm still okay with that. And yes, Anil, I can chat just real briefly because I have to get ready for another presentation that comes up at the top of the hour. But let's just take a look at what's going on with, if there's LABU. So look at that one, that 1 hour, this is a 1 hour chart. Yes. So at 8 o'clock this morning and closed at 9, this moved from $68 all the way up to almost $76 during the day. Not good. IPGP, which I haven't got, what is that? I always take a look at what kind of volume are we trading here. Yeah, it's about an average 500,000 K. What do these guys do? Who? Barry? Oh, Barry. Anyway, okay, this is definitely a sell signal over here. Now, how far is it going to pull back on the this is a weekly chart over here. How far is it going to pull back? We could just throw in it didn't do a lot of stopping on the way up, although it looks like it's got some right here at the 210 level, got some stopping there. TSI is just about down into the lower zone. Let's take a look at it. Yeah, it's been almost on a tear almost ever since it became public, or at least over the last, from this point. I mean, that's pretty much a tear. That's since May of 2000. This is a huge run from May of this past year up to where it goes today. So, natural getting a pullback here. And, I would sit there and wait on it. And also, I don't want to see what the options do and all that kind of stuff. You're wondering if this is done or not. That's a great question. It may be just doing a pullback. If you were one of the things we'd be looking at here is, okay, there's a trend line. It did break that today, but it did push it. We had a close below the 8-day there, and the low of that day has not been violated yet. So that's one of the rules we have to get out. But also we did break down. It has not closed below the 50 yet, but we did get a fairly high volume. That's a high volume move right there. Well, buying right there. But that's a pretty high volume move to drop it out of and below the 20-day moving average. So certainly a warning sign. So, okay, with that, I'm just look. That's all I've got for today. And congratulations, Dave, on the TNA trade. Just keep up the great work, man. And we'll be seeing you guys next Monday. Some of you will be seeing in about a half hour. So God bless everybody. Neil, just hold. Hello, traders. This is Dennis of the Active Trend Traders. I want to remind everybody that the holidays are upon us, and it's a great time to take advantage of the year-end special, 40% off the regular membership for Active Trend Trading. And then Mike Traeger has gone nuts, but he is offering the early warning alerts for half off of half. So he has rearranged it and brought it down to $249 for the yearly membership of the early warning alerts. Don't miss this opportunity. Aloha.